let's talk about the precious metals because they've had
Mhm.
it's just such a crazy time, and I know silver is driving a lot of folks crazy. But let's start with gold.
Okay.
By my count, Chris, as we record this, today's the 20th day. We've had 6 days where gold has rallied over $90 in the
Mhm.
last 20 days. Now, we've also had a couple days where the gold has fallen nearly $100. Crazy volatility. What I wanted to ask you about is I keep reading people on X and other sites that say, oh, from a technical perspective, it's so overbought and such a crowded trade. And I've been writing about the commitment of traders report, and more fundamental stuff.
Yep.
Um, but on the technical side, what do you see?
Yeah, there's a lot going on. I mean, if we break it down into some different scenarios, so I'm in the camp that it is extremely overbought. It's a crowded trade. I think you and I showed these charts and talked about this the last time you and I were on, but more or less, I don't know if I have the chart here. I don't have the chart on me at the moment, but pretty much gold hit its measured move here at this
Hmm.
27 2800. It hit another measured move back over here. It hit another measured move back over here. It hit another measured move back over here and another one over here. Now, the reason I bring this up is once you've hit a measured move, sometimes you can have a blow off top or a kind of a bubble phase or a crowded trade plate or whatever you want to call it. Each of these, it may not look like it, but every time we've hit a measured move and then it becomes that crowded play where everyone seems to be piling into it. Each one of these gold rallied roughly 22 to 24%. And it's right where we're at right now.
Okay.
And to me, that is like the crowded play. Once we've hit that target and kind of the masses have FOMO, because I see this all the time. Everybody feels like they're missing out on gold if they're not in it, and they're piling in and they're driving the markets up. So this feels like that crowded FOMO trade, which is why some people are saying it's like way overbought. And I believe it is overbought temporarily. I do think we're going to come way back down and have a sharp pullback. So longer term, looking forward, I do believe we're going to see gold have a correction, and it could pull back to 26, 2400, maybe even 2200 if we go into a big financial reset. And we've seen this over and over again. The 2000 was 34% correction. If we look at where that is on this chart, it brings us back down to about 20, 22, 2300, which is also a Fibonacci retracement level. It's actually a sweet spot where it should pull back and it would be actually very bullish. And then it could turn around and skyrocket up to, 7, 8, 12,000 after that. So short term, if you're a short term trader, like focusing on the daily chart, it is still in a strong uptrend. You really don't want to be trying to pick a top. You don't want to be betting against it. You should just know that this is like borrowed time or free money if you're long and riding it up. And the short-term chart, based on this reversal that we've seen in the past week, is pointing to a fairly significant push to the upside now. It looks like gold could rally to about 3750 as that next target. So this here is a bull chart, a bull flag pattern. It rallies up, flags against the direction. And then, of course, I think we're going to rally up to 3540, somewhere in there, and then up to 3750. So I think gold has more potential to blow off and continue to shoot higher. And that's what gold does in this type of environment. Typically, when we have this type of stage three topping phase that the stock market and the economy is in, we tend to see gold, fairly specifically gold, do come to life and outperform everything right near a stock market top. So that's kind of where I see that scenario is still bullish on gold short term, but I think 6, 8, 12 months from now, gold will be much cheaper. It'll sell off with the stock market. And because almost everything goes down when the economy collapses and we go into a recession. And a good example of that is if we take a look at gold, just these three trading sessions. These were the 3 days that the S&P 500 had that collapse in price where the panic hit the market.
Hmm.
These right here. This is the first time we've had that bout of bear market mentality where everybody literally freaked out,
Sell everything.
bailed out of their trades, and then they started finding out how do they profit from a bear market. When we have this kind of fear in the market, it
Hmm.
pulls gold down. So those days are exactly what hit gold. And so you can imagine gold fell 7.5% on those 3 days, which is huge for gold. Just imagine if you're in a bear market for 6, 8, 12 months, and we have every week we have a few of those big down days that pull everything down. So gold probably won't be immune to it. I think gold will pull back, and I think it's going to be an opportunity, as you and I have talked about. But you definitely don't want to be betting against gold right now. It is kind of in that parabolic blow off phase. It's kind of in a little bit of a bubble move, and it's to me, it's very high risk. It could, in one monthly red bar, it could reverse down so quickly it'll make people's heads spin in terms of how it can wipe out price action. We could see a big pullback in price, which we've seen in the past. One huge blow off move is more than wiped out the very next month. And I
Hmm.
believe we're kind of in this nosebleed territory. So just be cautious. I think if you're looking to buy gold and you have FOMO, I think you could probably buy it at the same or a much better price if you just give it a bit of time. And it'll be ready for the next leg up when you get into it.
Let's discuss silver then too. Because unlike, I mean, everybody's talking about the gold silver ratio being over 100, and
Mhm.
gold making all these new all-time highs and silver just kind of putzing along. Let's wrap up with silver. What do you see there?
Yeah, silver definitely it's not my thing right now. I like silver and I like miners when we if we have a financial reset, that's when I'm excited about silver and miners. Silver right now I think carries a ton of volatility. It's the daily chart really shows it very clearly. As soon as we hit a bout of selling, those waves of fear in the stock market, you can
Yeah,
see what silver does. It fell like 22 or 24% in a few days.
brutal.
It is a small market. When people freak out and they hit liquidation, they sell things, silver gets hit very hard. So it's kind of like walking through a landmine. I do think silver has potential, though, right now to rally to about $38 an ounce, which is a pretty substantial move.
Yeah,
This is the Fibonacci measured extension move to the upside. We got a rally, we got this bull flag pattern, and it shows that it could go all the way up to about 38. So percentage wise, if it can get traction and hook up here, it could have a very explosive move. But as you know, silver is very tough to trade because it sometimes takes forever to etch out some growth, and then boom, it wipes it all out in a couple of days. So
it
it's
sure does.
very difficult. You're kind of like you got to be in there and you got to ride the volatility, put in time, and hope for that pop. But
Yeah,
pops, will probably be fizzled out. If it hits 38, I would expect it's probably going to come down very sharply. I think it'll be a very quick, crowded trade move, kind of like what we saw over here. You see a big pop, takes about 2 or 3 days to work itself out, and then it just fizzles out again. So silver and miners do have bullish chart patterns along with gold. They are the favored asset right now. They're holding up very well. So they're not a bad play. People just need to realize, I think they're not like a buy and hold here. It's more like get in, make some money, protect your position, like manage it, and get out, and then look for a fresh trade. People buying right now, I think for the long term, you're kind of buying at kind of a high price. I think you can pick it up a little bit better price down the road.